57 basis points, pick your point on the curve, pick your spread, and we've got a flattening theme over the year so far. Should the Federal Reserve take any notice of that whatsoever?
I don't think so. Look, the history of the flattening yield curve is very inconclusive. Even when it does invert, it tends to take quite a while before we see signs of inflation. Given how low the rates are, I don't think that should be their primary concern.
Michael?
I couldn't agree more. This increase in rates is first a normalization of rates, and second, an actual tightening cycle. And of course, if you go back through tightening cycles, you do see flattening yield curves. I think you have to step back and think, okay, the bond market is moving in strange and mysterious ways, partly because of what Mario Draghi and the BOJ is doing, and of course there's a longer issue about structural disinflation, as well. But I think if you stand back and just say, what are the recession risks? Go through every single economic metric in the U.S., or for that matter, in a lot of key economies that can impact the U.S., it's hard to really see a recession. So if you're looking at it as a recession indicator, I just say, look at your core dashboard, your economic dashboard, and not necessarily the 210.
I've spoken to two Fed presidents this morning, Neil Kashkari of Minneapolis, Robert Kaplan of Dallas, and they've actually both said they're taking notice. They think you should take notice of a flattening yield curve.
So there is one aspect you could see that, there's one point of validity. To the extent the flat yield curve precludes the banks from lending, there is a possibility that you do not get enough credit creation to create a sustainable cycle. I just don't think we're at that point. The ROEs are reasonably high. I think the bank lending could pick up, and there is sufficient reserves to do so.
Neil thinks you should be worried that inflation is not yet at target, for credibility purposes as well. Do you think they should be worried about that?
Look, it's a very fine line between being too late and being too early. I think the Fed is looking at a dashboard that suggests that the labor markets are tightening. That is absolutely right. They are puzzled why you're not really seeing the inflation. But you can't really wait to see several quarters of rising inflation before you start to tighten.